In recent months, the global trade landscape has shifted dramatically, with the United States launching a new wave of tariffs targeting major trade partners, including Canada, Mexico, and China. These actions triggered swift retaliation from each country, creating a trade war ripple effect that is touching businesses, consumers, and economies across the globe. In this video, we are going to break down how each country, Canada, Mexico, and China, is responding, and what these retaliation measures could mean for the future of global trade. Before we dive into the retaliation itself, let's briefly revisit what set this off. Earlier this year, the United States imposed additional tariffs on a wide range of imports. Goods from Canada and Mexico faced a 25% tariff, with Canadian energy products like oil and electricity hit slightly lower at 10%. Chinese imports were slapped with a 20% tariff across key product categories, from electronics to machinery to textiles. According to the U.S. administration, these tariffs were meant to level the playing field, protect American industries, and encourage companies to shift manufacturing back to the U.S. But trade partners saw it very differently. They saw these tariffs as economic aggression. In response, each country rolled out its own set of countermeasures, targeting U.S. exports in strategic ways. Let's start with Canada. Almost immediately after the U.S. tariffs took effect, Canada announced retaliatory tariffs covering over $100 billion worth of American products. These tariffs didn't just target a random mix of goods, they were carefully chosen to hit U.S. industries with strong political influence. Canadian tariffs applied to American agricultural products like dairy, pork, and grains, as well as manufactured goods and consumer products. By choosing these categories, Canada applied direct pressure on states where these industries play a major role, sending a clear message to Washington. Canadian Prime Minister Justin Trudeau publicly declared that Canada would not be bullied into submission and would defend its economy at all costs. This isn't just political posturing. For Canada, the United States is its largest trading partner, and any disruption to cross-border trade could have severe economic consequences. But Trudeau's stance makes one thing clear: Canada is prepared to play the long game. Now let's look at Mexico. Mexico's response followed a similar pattern, but with its own regional twists. Mexican officials announced retaliatory tariffs covering a broad spectrum of U.S. products, from steel to farm goods like apples, potatoes, and pork. Mexican leaders stated openly that they aimed to match the economic impact of the U.S. tariffs, dollar for dollar. For Mexico, the goal is not just to defend its economy, but also to avoid appearing weak in the face of aggressive U.S. policies. What's particularly interesting about Mexico's retaliation is its dual impact. First, it raises prices for American goods entering the Mexican market, which can directly hurt U.S. exporters. But it also triggers inflation inside Mexico, as the cost of importing critical materials rises. This creates a feedback loop where both economies take a hit, which is why some analysts warn the U.S.-Mexico trade dispute could escalate further if not resolved soon. Now let's talk about China. As expected, China's response was swift and strategic. China imposed new tariffs on billions of dollars worth of American exports, focusing heavily on agricultural products like soybeans, corn, and meat, all sectors critical to American farmers. This wasn't a random choice, it was a calculated move designed to apply maximum political pressure, especially in states where farming plays a key economic role. But China's retaliation goes further than tariffs. Chinese officials have hinted at other non-tariff measures they could deploy, such as tightening regulatory inspections on American goods entering China, delaying approvals for U.S. companies doing business in China, or encouraging Chinese firms to shift their sourcing away from American suppliers. These non-tariff barriers are harder to track, but they could inflict even more long-term damage. What happens next depends heavily on the United States. If the U.S. maintains its current tariff policies, all three countries could escalate their retaliation further. Canada could expand its tariffs to cover more U.S. industries or increase rates on existing tariffs. Mexico could broaden its list of targeted products, further affecting U.S. exporters. China, always thinking strategically, could weaponize its control over rare earth minerals, pharmaceutical ingredients, or other critical materials that U.S. industries depend on. What does this all mean for businesses, consumers, and the global economy? For consumers, it means higher prices. When tariffs go up, costs get passed down the supply chain and ultimately to the end buyer. For businesses, it means rising costs and supply chain uncertainty. Companies that rely on imported materials will face increased costs, forcing them to either absorb the hit, raise prices, or find new suppliers, all of which carry risks. For farmers, the impact could be devastating. Many American farmers rely heavily on export markets, especially in China. Retaliatory tariffs that close off those markets leave crops with no buyers, shrinking farm incomes and threatening the livelihoods of farming families. This is why agricultural groups have been among the most vocal critics of the U.S. tariff strategy. On a larger scale, prolonged tariff wars inject uncertainty into the global economy. Businesses hesitate to invest, unsure if trade rules will change again. That uncertainty can slow economic growth, reduce hiring, and chill global supply chains, even for countries not directly involved in the tariffs themselves. There are also less obvious consequences. Today's products are rarely made in a single country. They rely on complex global supply chains. Disrupting these flows affects industries across borders, delaying production and driving up costs everywhere. Even if a country isn't targeted directly, its economy can still suffer from these ripple effects. Where does this all lead? While the US, Canada, Mexico, and China are all talking tough right now, history tells us that prolonged trade wars rarely end with clear winners. Eventually, negotiation becomes necessary. But until that happens, businesses, consumers, and workers will remain caught in the crossfire. Before you go, make sure to check out our previous 2 videos where we covered the US tariffs themselves in detail. Understanding both sides of this trade war, the actions and the reactions, is key to seeing the bigger picture. And if you found today's analysis valuable, please support our channel by liking this video, subscribing to the channel, and leaving a comment below to share your own perspective. All sources used in this video are listed in the description. Thank you for watching US Trade and Tariff Watch, your trusted source for clear, credible, and insightful coverage of global trade.